Now let's get back to the wider emerging market story and talk about Turkey. The central bank meets today for a closely watched decision. An emergency hike to 16.5% just 2 weeks ago offered only temporary relief to Turkish markets. Stocks are now in a bear market and bond yields, they've spiked. Bloomberg's Simon Demirkan is in Istanbul. So Simon, what exactly are the latest set of expectations for the decision by the central bank today?
Well, analysts are divided. There's some who say that we could see a rate hike by as much as 100 basis points in order to restore confidence to the Turkish central bank. And also earlier this week, we had data that showed that inflation increased by the most in 6 months. However, there's others that say last month's 300 basis points emergency rate hike was enough to calm the markets, and therefore the central bank will hold this time around. But there's the political pressure to consider as well. It's no secret that President Erdogan hates high borrowing costs.
Simon, the International Institute of Finance, they've weighed in and they say that, well, the 300 basis point hike wasn't enough, and in what is the world's worst performing bond market, the real policy rate has largely been left unchanged. So what happens if the central bank does not act?
Well, we could see more market backlash. It's no secret that before the emergency rate hike, the lira was completely in free fall. It's currently one of the worst performers in emerging market currencies, down 17% against the dollar so far this year. As you said, Borsa Istanbul is in a bear market, down 20% since its highs in January, and the yield on Turkey's 10-year government bonds at record highs at 15.5%. So if the central bank holds, we could see another sell-off in the Turkish assets.
You know, Simon, we've got the election coming up. How does that weigh into the picture for central bank policy? I mean, it's been a rough ride for this bank, hasn't it?
Well, this is the last central bank meeting before the elections at the end of this month. And of course, President Erdogan spooked investors when he spoke to Bloomberg TV in London, where he said that if he wins the elections, he plans to take more responsibility over monetary policy. Now, this is concerning investors over the independence of the central bank. He also said that if he wins the elections, he'll deal with currency manipulators. Now, who they are and how he'll deal with them still remains to be seen.